Mazars is a leading international audit, tax and advisory firm, fully committed to play its part in creating a fairer and more sustainable world. We serve clients of all sizes, both public and private, across sectors with a wide range of services. Through this multidisciplinary approach, our people all over the world are dedicated to helping clients mitigate risks, operate transparently, and grow responsibly, while always keeping the public interest at heart. As times are changing, now more than ever, organizations must ensure the actions they take today are the right ones for the future they want to build. It is time to move forward with renewed purpose, focusing on what matters and investing where it counts. For our people, our clients, our planet, and society. Acting now for what's next.
Good afternoon to our viewers in Switzerland, and good morning to the many who are joining us today from across Latin America. I am Tatiana Gaspar, CEO of the Latin American Chamber of Commerce in Switzerland, greeting you from Zurich, and very pleased to be your host for this webinar. Today's topic, tax update in Brazil, Chile, Colombia, Mexico, and Peru, is proposed and entirely organized by our member Mazars. It is my pleasure to introduce to you all our panelists. Ana Luz Bandini from Mazars Peru, Valkyria Fiusa from Mazars Brazil. I hope that both will be able to connect very soon. Consuelo Munoz from Mazars Chile, Andres Cortes from Mazars Colombia, Jose Jimenez from Mazars Mexico, and Francisco Zamora from Mazars Switzerland, who is also today's moderator. A very warm welcome to all of you, and thank you for agreeing to contribute to this tax update on 5 Latin American countries. We have a lot of ground to cover in the next 90 minutes. Before we begin, just some quick information for our viewers. The entire session will be recorded and uploaded later today to our YouTube channel, LATCAM Switzerland. We agreed with the panelists that we would first hear all the presentations about their respective countries. At the end, there will be time for Q&A. Please submit your question in writing in the Q&A section and indicate which country it concerns. You can do that at any time, and we will answer by order of reception. The entire slide presentation will be at your disposal on the LATCAM website under this event. Time now to hand over to you, Francisco. Please go ahead.
Thank you very much, Tatiana. Hello, good morning in Latin America and good afternoon in Switzerland. Let's share my screen. Welcome to this perfect. Good. So I hope you can see my screen. Welcome to this session. Today we have, as Tatiana mentioned, 5 experts from Latin America. All of them are partners of Mazars, specialized in domestic and international taxation activities. Our members usually focus on tax planning, M&A, tax due diligence, tax compliance process, and tax reporting. They are experts in tax strategies in their jurisdictions and have managed tax risks across Latin America. They basically work for domestic and multinational companies. We have Valkyria from Brazil. Valkyria is a lawyer from Mackenzie University, and she specializes on taxes and financial institutions. We have Ana Luz Bandini. She's also a lawyer from Lima University, and she's part of the Lima Bar Association. She has an LLM for Georgetown University, and it's a member for the International Fiscal Association and the Instituto Peruano de Derecho Tributario. We also have Consuelo Muñoz from Chile. She is a lawyer from Universidad de los Andes with a postgraduate in taxation. She basically focused her day-to-day on construction, automotive, mining, and energy companies. And the gentleman here, Andrés Cortés Hernández from Colombia, he is a lawyer from Universidad del Rosario with a tax specialization and an MBA from INALDE Business School. He is professor of tax law on different universities in Colombia. And finally, we have Jose Pepe Jimenez, who is an accountant and has an international tax degree from Duke and ITAM University in Mexico. He is also part of the International Fiscal Association in Mexico, and he is the leader of Mazars in Latin America. Let's welcome our speakers. And today we're going to talk about the tax reforms for 2024. Let's start first with Chile. Please, I'm going to give the word to our colleague, Consuelo.
Thank you so much. Let's begin with the regulation of the past year. The Chilean government introduced a bill aimed at modifying completely the current taxes. Basically, to increase the tax.
Consuelo, sorry to interrupt. We have a bit of problems with the audio. Can you approach a little bit closer?
Can you hear me well now?
That is much better. Thank you.
Okay. So let's start again. So we're going to begin with the regulation of the past year. The Chilean government introduced a bill aimed at modifying completely the current taxes.
Consuelo, you're breaking. Sorry. Can you speak again, please?
Hello? Can you hear me well?
Hello, hello? Yes.
Hello?
That is better. Can you speak?
Yes.
That is much better, please. Thank you.
Are you hearing well or no?
Yes, I'm hearing you well now.
Okay. So the government introduced a bill aimed at modifying completely the current taxes, basically for increase the tax collection. Unfortunately, both proposals faced rejection in the Senate, which signified a failure for the current government. Considering the previous and according to local legislation, the government had to wait 1 year before submitting any other bill on this same matter. So we move fast forward to December 2023, and finally the government announced that they will keep insisting on their project, that it is known locally as Pacto Fiscal, indicating that the tax reform will be submitted to the Chilean Congress in 2 phases. The first in January 2024, focusing on tax compliance issues, and in March 2024, targeting modification to the income tax system. In the past week, the Ministry of Finance finally announced that the bill for tax compliance measures will be submitted to Congress, particularly this week. Until today, we haven't had access to the specific provision of modification proposed by the government. Still, we know this project primarily aims to reinforce Chilean taxpayers' compliance with their tax obligations. And for example, and for those purposes, the Chilean government wants to strengthen the powers of the actors of the public administration, which consists basically on the tax services, the customs authorities, and the tax courts. procedure for applying identity avoidance because an argument procedure for examination instead of the current one that requires the tax authority has to go to the tax court to request this application. Another measure that the government is pursuing is they want to propose that this reform is to flexibilize the bank secrecy in case of tax inflation. Considering the previous, and as we still do not have access to the information, so this tax compliance reform, we still cannot discuss about the specific details. However, once we get more information about it, I think the really interest for you is that it's important to mention that Chile rejected the second proposal for an
I'm very sorry to interrupt, Consuelo. We can hardly hear you. There's a really broken sound. I don't know what we can do about it. If your audio is somehow blocked by something, or it does not sound good. One cannot understand a word. Francisco, what do you propose?
Okay, so basically let's summarize a little bit while Consuelo try to fix the audio. There are no until now there is no tax reform for Chile. This according to the last announcement, the bill for this core tax compliance reform is going to be submitted until this week. So we hope there is something in the next within the following days, and in order to strengthen transparency and boost the productivity and combating tax evasion and tax avoiding in Chile. So that's basically a summary of what Consuelo mentioned. Perhaps Consuelo, can you hear me better? Can you speak now? Let's see if you manage to fix the sound. No. It seems that your audio goes back and forth.
I'm so sorry. Okay, can you hear me now?
No, it seems that there is some misconnection around. Okay.
Francisco, may I suggest that we go to the next speaker, and maybe in a little while, by order of magic or some higher power, Consuelo's audio will improve.
Okay. Perfect. That can be an option. Okay. Okay. It's good. Let's go to next speaker regarding Colombia.
Okay, good afternoon, everyone. Thank you, Francisco. Thank you, Tatiana, and thanks to the Latin American Chamber of Commerce in Switzerland for this time and this space. Francisco, can you hear me well? We don't have problem with the sound in this case, I think. Yeah?
Everything is perfect. Thank you.
Okay. Go ahead. So in Colombia, we don't have recently tax reforms for now. Our last tax reform was in 2022, but some rules or some regimes just started right now in this year, in January. That is the case of the significant economic presence is a new regime in Colombia that pretends makes taxpayer not residents or individuals or company that sell goods or provide services in Colombia. From 1st January this year, the significant economic presence start with a new regime. And all the companies that provide services or sell goods from abroad to Colombian customers can be classify our taxpayers here in Colombia under two conditions. If the company of the supplier of these goods or services has 300,000 customers or Colombia, or provide services in Colombian pesos, maybe this supplier will be a significant or will have a significant economic presence here in Colombia. In that sense, this company or individual have to obtain two ways in order to pay taxes in Colombia. The first way is obtain the tax ID here in Colombia and fulfill the income tax return one time a year in order to pay the income tax in for a rate of the 3% of the gross income here in Colombia. In the other hand, if the supplier of those goods or services cannot be to obtain the tax ID, the another way is establish a withholding through the commercial banks here in Colombia. The second way is so complicated because the commercial banks will be the responsibles in order to withhold all the tax from the debit cards or credit cards, from the customers here in Colombia. And in that sense, the local banks is not viable right now in order to accomplish all the duties related with these systems. So in the first hand, maybe the provider of services of good under the significant economic presence will have to obtain the tax ID here in Colombia in order to accomplish with this new regime. The second regime is not new, but we have some special topics here. Is the simple income tax regime for individuals or companies that provide services here in Colombia, any kind of services. Today in Colombia, their ordinary rate for income tax is the 35% over the profits. But if you obtain this new regime, simple income tax regime, maybe your taxation or your tax rate will be the 13% over the gross income. So you have to make figures in order to establish will be the most when you obtain the most beneficious in this case, because maybe the 14% over the gross income will be better than the ordinary system. In that sense, all the companies or individuals that provide services here in Colombia and obtain the tax ID as a fiscal resident in Colombia in order to obtain income close to the $102,000, $1,200,000 for a year. Maybe the tax rate in order to 40.5% will be better than the ordinary regime. This is applicable or available for all the companies and all the individuals that obtain this value of income. The third tax or new regime is the healthy tax. The healthy tax is a new tax that starts in January for 2024 and is applicable or to be paid on the production, sale, and importation of high sugar drinks and industrially ultra-processed food. The importers and manufacturers of these products are the taxpayers of the health taxes. In that sense, the rates of the health tax on high sugar foods depends on the content of the sugar. Okay, for the tax health, for this tax, the rates will be 50% in 2024 and 20% in 2025. Okay. The tax on single-use plastics are another new tax here in Colombia. The tax on single-use plastics is payable on the sales withdrawals from the stores or import or from own consumption. The taxpayers will be the producers or importers or the single-use plastics. Okay. This tax will payable on the sales of in the other hand, on the withdrawal from stocks for own consumption and the importations. And this tax will be applicable over the value of the sale. Okay. In the other hand, in Colombia, we have tax incentives. The most important tax incentive that we have today is in the generation of electricity from non-conventional sources. In that sense, we can obtain this kind of company or business can obtain three types of benefits. The first one is the 50% income tax deduction for the investment made in the first 15 years of the business. I mean, all the investments that the company make in the first 15 years here in Colombia will be deductible from the income tax return. That is a great benefit in this business. Also, these kind of companies can accelerate the depreciation in 3% per year about the equipment and machinery related with this part of the business, the non-conventional energy generation projects. And on the other hand, we have the exclusion of VAT on the acquisition of goods and services for the developed these power generation projects. It's important because you can import or obtain goods and services in order to start with this kind of projects, and all the VAT will be exempt in this project. So that incentive is so important because Colombia has a special location in the world because the Caribbean and the wines here in Colombia works perfectly in this business. In the other hand, Colombia from maybe 2020, maybe 2018 has a Colombian holding regime. We have all the rules accomplished with the OECD rules. We accomplish with all the normatives come from the OECD, but the Colombian holding is special because maybe for example, a Swiss company can invest here in Colombia in a Colombian holding company in order that this company make another investments in South America, maybe Peru, maybe Brazil, maybe Argentina, Chile, and all the dividends that come from these countries in South America when another part of the world, those dividends or profits that receive this holding co will not taxable here in Colombia. And if the holdco after a few years decide to sell this participation or shares in those companies, the value of the profit in this kind of transactions will be not taxable here in Colombia. In the other hand, if the investor obtain dividends come from the holdco company, the Colombian company, those dividends will be not taxable in Colombia. And the final topic here is if the investor, in this case or in this example from Switzerland, sell the shares from this holding company, all the profit will be not taxable here in Colombia. So the Colombian holding companies is a special regime in order to generate employees here in Colombia, in order to increase the benefits to all the employees here in Colombia. We have some requirements about this Colombian holding. You have to invest in shares in another companies from abroad. And the second one is the direction of the company have to be here in Colombia. Here in Colombia is special. The direction is the most important topic here in this regime. In the final topic, let me check the discount of VAT paid of the acquisition of real productive fixed assets. Here in Colombia, if you developed some projects or you need to improve your equipments or your buildings or your plant of production plants, maybe you can't pay some VAT in these acquisitions or these constructions. All the VAT that you paid at acquiring, manufacturing, and importing about these real assets will be a discount in the income tax. In other words, all the VAT that you pay in these kind of projects will be a discount directly to the income tax return. So this VAT will be less than income tax. It's a special benefit here in Colombia that you can use in order to perform or improve all your fixed assets here in Colombia. I think
just something that you were mentioning about holding companies and the basically international tax framework from Colombia. How is Colombia in the international taxation? How many double taxation treaties you have? How are things regarding Colombia and the rest of the world? Because I believe this regime may be the door for Colombia in the future in order to be some sort of sub-holding company.
Thank you for the question. Colombia has 14 double taxation treaties in force. The most important in order our region, our continent, is the double taxation treaty with Mexico and Canada, because those countries maybe are working a lot in nearshoring. That is a new wave in the region. But our double taxation treaties are so important because those treaties are working with the most important countries that we have operational transactions. We have another agreements with Brazil, Netherlands, Uruguay, and United Arab Emirates, but they are not in force already. But maybe we can't use those double taxation treaties in order to perform all the benefits if you need to work with another countries in the region.
Don't
I
forget
think
Switzerland, because I understand there is a treaty between Colombia and Switzerland too.
yeah, exactly.
Good.
I think that double taxation treaty with Switzerland is the oldest one that we have.
Okay, perfect. Thank you very much for everything, Andres. Here for the audience, we have a link that you can use your mobile, or you can use and put it into the screen, so you can have access to different literature regarding Colombia taxation and the things Mazars has published locally. So feel free, once you have the presentation, just feel free to use your mobile, go into this URL link, and that goes directly into the publication. Good. Now we have Mexico. Pepe, are you around?
Hello, Paco. Can you hear me well?
I can hear you perfectly, Pepe. Thank you.
Great, and thank you for the time. Thank you, everyone. As I say to Francisco Paco, he's telling me Pepe, and you can see that my name is Jose. That's very common in the Latin countries to have a nickname. That's how and everybody calls me Pepe. Thank you, Paco, and thank you to the Switzerland Chamber to invite us to this session. I'm very happy to be here. And well, just to keep the time, as Andres was mentioning, I want to begin with the catchy word nearshoring, right? That the nearshoring is something that is happening a lot in Mexico. I'm located in Mexico City, and constantly we have approach for many foreign corporations, trying to incorporate a company or begins operations from abroad in Mexico. And why? Well, we're very close to, of course, to the North America, to the US market. That is a huge market, but at the same time, we are very close to LATCAM. And we are also. I will speak further from a project that the government has about connected the Pacific Sea with the Atlantic Sea. That will be something that will, we will become competitors of Panama if that works. We're still in the process, of ended up all the infrastructure that is needed. But in the meantime, this October 2023, there was a decree issued by the government, really focused on the industry that most of the income comes from the exportations, and this decree allows the possibility to make an accelerate deduction of the fixed assets. Usually, these fixed assets, as it is normally in accounting standards and from tax purposes, you can deduct it in Mexico on a very small percentage, 10-15% on annual basis. So that ended up having a deduction for the following 8 years, depending on the kind of machinery and equipment. So this is a way to incentive, the creation of companies. And as I am mentioning here in the slide, this incentive is not for all taxpayers. There are some specific industries that will be allowed to get this deduction, accelerated deduction, and mainly are focusing on the automotive. As you are aware, Mexico is a big hub for the automotive industry. Now also, they have been increasing on investment regarding electromobility. I don't know if you hear about it, but Tesla is opening a big fabric in the north of Mexico. So I don't know if this is related with this, but at the end, it's part of the investment that we are having, and how all these new industries generating new opportunities, not only for the companies who are focusing on developing batteries or developing the cars, so also for the suppliers, chain supplies that are for these kind of industries. So also it is available for medical and pharmaceutical devices, also in the north of Mexico, closer to LA, California, San Diego, Tijuana. There is a lot of industry focusing on medical equipment and pharmaceutical. So agribusiness, human and animal food, beverage, all these kind of industries are the ones who will receive this kind of benefit. As I was mentioning, it is mandatory that the income of these taxpayers who will get the incentives is at least 50% of exportations. So this will not apply if you have a local operation in Mexico. So it is very important to measure that to see if you will be entitled to get this tax benefit. This is not applicable for furniture, office equipment, combustion cars, or aircraft. It's it's only focused for fixed assets that are mainly connected with the production that is ended up having an exportation. On top of that, in this the same way inside this degree that I was mentioning, there is another deduction related with training expenses. As you can see, for the fixed asset, the deduction will be applicable since October 2023 until December 2024. But regarding the additional deduction for training, this will be applicable since 2023 until 2025. The knowledge for the training that should be entitled to get this degree will consist only of technical or scientific knowledge that is linked to the taxpayer activity, right? So if you, as I was mentioning, if you are an automotive industry, or you are developing batteries, or you are on the manufacturing sector of the pharmaceutical, you need to prove that the training that your team is getting is related with with the activity of the taxpayer, that in this case will be healthcare, automotive, among others, right? So that is very important, and there were rules issued already on how to comply with this decree. There are some requirements that I will mention in the next slide. Also, what on this decree consists on getting an additional an additional deduction equivalent to 25% of the training increase received by each of the workers in the year. So you need to make a comparison on the previous year with this year, so that increase that you will have with this training will get an additional deduction of 25% of the expense that you will have for each employee in this case. And as I was mentioned at the beginning, this is totally related with the nearshoring, knowing that we need to have more workforce capable with the technical knowledge of the special industries that are coming to Mexico, that we may not have the experience on the workforce needed for the develop of those activities. So, Paco, if you can help me with the next slide, please. Also, the other important topic that we have is on developing on international taxation. Multilateral instrument in Mexico, it's in force since January 1st, 2024.
Pepe, sorry to interrupt here. Perhaps plenty of people in the audience is not a tax expert. Can you stop a little bit and explain what is exactly this multilateral instrument round? Because it may be complicated for non-tax people to understand it.
Yeah, sure. And also for me at the beginning, when I hear MLI, I for me now, I'm very familiarized with the term, but I know it's something that you may not be aware of. What is this? The MLI, as I put it here, is the acronym of multilateral instrument. The multilateral instrument, it's a result of the Action 15 BEPS. That if you are not familiarized with BEPS, is the base erosion profit shifting that the OECD members elaborate as a plan to avoid, the shifting of the profits, in all the countries. But the multilateral instrument, it's a way, treaties usually were done 5-10 years. They are not that fresh regarding how the business or the activities are carried forward in the world. The first example that I will put is the permanent establishment. 10-15 years ago, it was always attached to a physical office where you develop activities, because before having all technology, the only way to have a permanent establishment in other country was to have an office there, and in that country carry out activities, right? But right now, with the technology that we have, you can be working or doing business, I don't know, in China, but the business is, being closed and finalized in Mexico, and that ended up that there is no source of income attribute to Mexico because of the technology and all this. So what happens with the MLI is, instead of change all the treaties that we have, let's make a multilateral. That's all the countries that adhere to this initiative. They signed off in 2018. A modification of the treaties specialized on treaty shopping, permanent establishment, and hybrid mechanisms. That if you adhere to these new provisions established in the MLI, you will not need to amend your treaty that you have with the country. Maybe Switzerland in Mexico, they have a treaty, but they did not include these new regulations since the two countries were signed off, in the MLI. They don't need to modify the treaty. So now the new regulations will be enforced because the two countries authorize, these new regulations. So that helps you to, when you are analyzing certain transactions, you need to look to the MLI also to see if the new regulations will apply without the treaties still in force, but there were some modifications that were included in the MLI on definitions or transactions that need to be included. That it's an easy way to do it. It's more efficient.
So basically, and for those countries signing this MLI, and in order to analyze an international taxation transaction, you need to read the local law, you need to read the treaty application, and on top of that, you now need to read the MLI and whether the parties agree or disagree with a specific concept in order to give proper interpretation. Is that correct?
Correct.
Very
Correct.
Perfect. Thank you.
So this is very important for Mexico because since January 1st, 2024, we now have to apply the MLI on the analysis of any transaction that we are carrying out in Mexico. Of course, what I'm saying is you need to confirm is if the country with whom you are having the transaction, it also signed the MLI and it's enforced as the same case in Mexico. If the other country, I will put the example, Germany did not include Mexico as a cover on the MLI. For example, USA has not MLI, rules. So depending on which country, it will be applicable or not. But general speaking, if we are talking a transaction with Switzerland, with Germany, with Netherlands, with UK, we will need, to take a look to the new definitions. And the main, I will say, and Andres was mentioning that before, Mexico is a country who has many tax treaties. We are talking about 70, 80 tax treaties that we can apply. And unfortunately, there were abuses where Latin American countries were using Mexico, in the middle, just to use, for example, the treaty with the US or the treaty with Canada, and the treaty shopping, that is how it's called, it is included in this MLI now. So any treaties, because before the MLI was not really well explained. So one of the things that we are doing in Mexico is analyze the transactions that we are having, especially when we are operating with other countries that maybe Mexico was only used as an intermediary to call the benefit of the treaty. And this no longer will be applicable because now we have a rule that denies the application of the benefit of the treaty because it might be ended up as a treaty shopping. And also, finally, the permanent establishment regulation could be also applicable for many corporations who are operating in Mexico as a cost-plus entity where they only provide services and they are charging a markup to the related party abroad. It is really important to analyze what are the activities that Mexico are carrying forward and this might be applicable for digital services where you have a subsidiary in Mexico who has employees, but all the income comes from the resident abroad, and they are doing auxiliary activities, not really selling the services or goods of the resident abroad. But there are some definitions that might end up triggering up the permanent establishment. So that's something that we will need to review it, and we are doing it right now with many clients. So it's very important to have that in mind. The other topic that we have, Pillar 2, maybe you are tired about Pillar 2. It's the hot topic, but also if you are not familiarized, this is also part of the BEPS. It's like the minimum tax that corporations has to pay worldwide when they are in a consolidated group. It's a 15% of the effective tax rate on each level of the country that you may apply. It is important to mention that Mexico does not have any local rules yet, but there are many big Mexican corporations who have subsidiaries where the holding is located in Mexico, and they have subsidiaries in countries where the Pillar 2 will be applicable, that will impact at the end Mexico consolidation, because they will need to meet the 15% rule that I was talking about. So that is very, very, very important to have in mind, especially for Mexican holdings, as I was mentioning.
Perfect. Thank you. Thanks for this update, and thanks for the general comments on MLI. I just want to have a very quick. Let's see if Consuelo can already fix the audio. Consuelo, can you hear me?
Yes, I can hear you. Can you hear me now?
That's perfect. Thank you for the audio. Let's go and have a fast look to Chile. You were mentioning that there was no tax reform in Chile at all. Is that correct?
Yet.
Perfect.
So to summarize,
Yes.
and
Okay.
be really quick. Now, currently, particularly this week, we are waiting for a huge announcement by the government about the tax compliance reform. As I was saying before, the last year, the government tried to introduce a huge reform to the whole tax system to increase recaudation of taxes. That reform failed, and now the government had waited for 1 year, and they're going to submit the project again. Now they have split the project, and so they will begin with the tax compliance reform, and then in March they will be submitting the bill aimed to modify the income tax system. So currently we are really we're expecting the news, and we want to see this new proposal about the Chilean government. I was talking about I think something that I think it's really important to mention. It's the rejection of the proposal for a new constitution by Chilean people. As you all may know, we have two processes aimed to modify the current constitution, but both processes failed. So with this, we think that this chapter of modifying the current constitution, it's closed, and at least the current government, there are no plans to amend or replace the existing constitution by this government, at least for the next couple of years. So that's about the upcoming tax reform we are expecting, especially for this week. Can you move to the next slide, please?
Thank you. I believe the other reform in Chile is regarding the treaty with US.
Yes.
Tell us a little bit about that, please.
Yes, this is really huge for us. The tax treaty between Chile and the United States has officially entered into force, making, we think, a historic moment for our country. Chile has become the third country in Latin America to have a tax treaty with the US. We have Mexico has a treaty, and Venezuela as well. So we are really honored about being the third country. But what is even more noteworthy is that this is the only taxation treaty that has entered into force in the US in more than a decade. So we feel really honored and really proud about this treaty. This treaty comes into effect in the following dates. From the 1st of February 2024, it applies to withholding taxes, and for all other taxes, it has been in force since the 1st of February. Bear in mind that Chile also has a double taxation treaty signed with Switzerland since 2011. Actually, Chile has an extensive network of double taxation treaty. We have, I think, something like 27 double taxation treaties signed with a lot of countries. Going back to the treaty with and compare the double taxation treaty from the US and Switzerland, although both treaties have their own particular provision as they follow different models, if we quickly compare both conventions, the provision of the US double taxation treaty about certain aspects seems to have a more favorable approach. For example, in the case of the TTE signed with Switzerland, the rates applied to royalties may be from 5% until 10%, depending on the situation. And you may see, those transactions are taxed in the US treaty with 2 up to 10% of withholding taxes. The same is the case of interest. In the case of Switzerland, we may apply rates limited to 5 and up to 15. And in the case of the tax treaty with the US, rates are between 4 and up to 15 for the first 5 years, and then it will be reduced to 10. But the convenience of using one of the other double taxation treaties is going to be determined by the objectives of the investor. In the case of dividends, I think this is something that it's important to say. The effect is the same in both treaties, as Chile always includes a special clause known as Cláusula Chile, according to which Chile does not grant any remedy regarding withholding taxes on dividends as long as the corporate tax can be fully creditable against the final taxes applicable to dividends. Therefore, in that case, local Chilean law is fully applicable in DTT scenarios. I think in conclusion, this new tax treaty between Chile and the United States, it's a monumental step forward for our local economy, and it fosters economic ties between Chile and one of the biggest foreign markets. So okay. I think this is really huge and something we are going to see a lot in the next month.
Thanks, Consuelo. There is something that I remember from Chile, that you have something, it's like a catalog of tax schemes.
Yeah.
What's exactly that? And did that was modified for this year, even though there was no reform yet?
No, this is a really local matter, but it's very useful for us. The tax authority actually released an updated version of the catalog of tax schemes. Last December, we received the 8th version of this catalog. Basically, this catalog provides certainty to taxpayers concerning tax law, especially concerning different issues and business models that may be seen as abusive or elusive. This tool is really important for us as advisor, as one of the purposes of this catalog is to clarify certain borderline situations, especially about the application of the anti-avoidance rules, and also provides clear example of the most common situations that may be considered elusive by the tax authority. In this new version of the tax authority includes a total of 85 schemes, covering the most diverse situations, from corporate restructuring scenarios, VAT avoidance, estate planning cases, and avoidance of the gift tax. So this is an administrative tool for us as advisors that is really useful in case of planning and analysis of advisory situations.
Thank you. Okay. And the last point that you had in the slides, this ultimate beneficiary owners registry, is this a bill or something that is projected to come?
It's a bill. Actually, it's a bill. This bill was submitted. It's currently being reviewed by the Senate last December. This is a proposal issued by the government to establish a new national registry of final beneficial owners. It's something we call in Spanish Registro Nacional de Personas Beneficiarias Finales. Okay. This registry will require entities to provide information on any final beneficiaries holding at least 10% of the capital or voting rights in legal entities. This registry, according to the bill, it's going to be kept by the Chilean tax authorities, and it's going to be in a platform that will contain information about the ultimate beneficial owners of legal entities, investment funds, and any other type of entity, even the ones without legal personality. The information will be kept for 10 years and must be updated if any changes occur. If you suppose the legal entity is involved with operation with the Chilean government through public or private contracts, or you receive funds from the state, in that case, the information of the ultimate beneficial owner will be public. This measure, and its future implementation is aligned with the OECD recommendation on this matter. So something we see as a really positive measure for the country.
Perfect. Thank you. And thank you very much for everything. I'm glad we fixed the problem with the audio.
I try to be really quick, so
thank you very much. Let's
okay,
go fast to Peru. We're just about on time, and we need to go for 2 countries more. Ana Luz, are you around?
Yes, Francisco, thank you. Hi, everyone, and thank you for joining us today. First, I'll start by pointing out that the changes introducing the tax system are far from being considered a comprehensive tax reform. There have been developments with the purpose of enhancing the effectiveness of the tax administration. There is an intention to encourage voluntary tax compliance, and definitely the Peruvian tax administration will continue focusing in combating tax evasion and tax avoidance. With that said, I'll start referring to some interesting developments that I suggest to watch during fiscal year 2024 and onwards. In terms of tax compliance, we have 2 new set of rules that are really part of the tax reform that was introduced in Peru in 2022. But the practical issue, there was a practical issue because to become effective, to be really applicable in practice, certain regulations were required. Unsurprisingly, this counts from 2022, and it is just until the end of last year that the regulations were finally approved. So I am referring to the compliance profile and the subject without operational capacity. What is the compliance profile? Well, now in Peru, the tax authorities will classify taxpayers by assigning a specific profile. Each profile will be determined based on specific conducts, on a specific behavior, whether or not you were compliant or not, using a specific time frame for evaluation. Definitely, taxpayers in the lowest or receiving the lowest profile will have an impact in their tax behavior. I highlight this aspect because this is going to be gradually implemented. The tax authorities has announced that they will start with corporate taxpayers, but this is highlighting the importance nowadays of having an adequate tax control framework, because definitely companies will like to take preventive measures in order to get assigned in the upper levels, right? So tax compliance is becoming very important in Peru nowadays, more than ever. And then the second aspect, the subject without operational capacity, is a title or a status that the tax authorities can now assign based or after conducting a tax procedure. And the idea is that once they identify that there is, let's say, a company that is issuing invoices for certain activities, invoices that are used by other taxpayers in order to claim VAT credits or allowable deductions for corporate income tax purposes, then those companies will be assessed in order to identify whether or not they are really able to perform in practice the transactions that are considered in the invoices. So they will verify if there is enough infrastructure, human resources, machinery and equipment, depending on the industry applicable to the activities that have been billed. The consequence of being tagged or being assigned in the status of the subject without operational capacity is that those companies that receive invoices from a company that has been classified as such will not allow any tax credit, will not allow any tax deduction. So this also stresses the importance of prevention measures, because it will happen to companies that can be subject to this procedure and could be potentially subject to the assignation of this status. The status, once is assigned, will remain for 4 years, and it will be published in the tax authority's website. And on the other side, taxpayers that are dealing or receiving or interacting with this type of taxpayers need to monitor and watch whether or not within their list of service providers, let's say, or providers in general, there is an entity that could be or could have been classified under this title because otherwise they will have adverse tax consequences. Again, tax compliance prevention is becoming key for Peruvian companies. And then, as Consuelo just mentioned for Chile, in Peru, we already have ultimate beneficial owner disclosure rules. This started in 2019. They apply to Peruvian companies and also to certain legal arrangements. And by legal arrangement, I mean, for instance, mutual funds, investment funds. So definitely the process is more complex for this second type of taxpayers. So we started 2019, 2020, it was gradually applied based on income thresholds to different companies. And then the obligation kicked in for legal arrangements. They're supposed to submit their first UBO disclosure return or informative return by January of this year, January 2024. However, there were several practical issues reported due to the number of individuals qualifying as UBOs, or because collecting the personal necessary data from the UBOs was really complex, and is still complex for this type of legal arrangements. And therefore, with the new set of rules that were published in December of last year, we had two important developments. One is that now it is possible to implement within the due diligence process, or the process that the taxpayer needs to implement to collect the necessary data to fill out the informative tax return. Now it is possible to gather this information using an electronic document, an electronic format, following or complying the minimum and necessary information required by the Peruvian Tax Administration. And it is possible to get a digital signature, which was not possible in the past. There was a requirement of having physical documents with a signature from the UBO certified by notary or by consulate means, which complicated things for non-resident UBOs. So now this is possible digitally, complying with certain requirements. There is a signature that needs to be, can be electronically, but the enterprise or the process of certification needs to be validated or accepted in Peru, and there is a regulatory agency monitoring that, but this is possible even for non-residents. And since the electronic form was just recently approved, in coordination with that, the due dates for submitting the return for these mutual funds, these legal arrangements, has been deferred until July 2024. So those that are investing in Peruvian funds, mutual funds, investment funds, probably know that things are moving on. Again, they are expediting their process of gathering the information, probably implementing the electronic format in preparation for the due dates that, as I said, are right now set for July 2024. And finally, as shocking news, we have to announce that there are no longer no exemptions applicable to capital gains in Peru for investing in the Lima Stock Exchange. During last year, we still had in place an exception applicable to individuals, residents, non-residents, investing in a stock issued by Peruvian companies and traded within the Lima Stock Exchange. That exemption is no longer in place. We were awaiting during December 2023. There was a bill passed. The Congress passed the bill, but the executive didn't approve it, didn't publish. And as a result, starting of this year, those capital gains are levied. Capital gains under domestic law are levied at a 5% rate, which is a reduced rate compared to the general one that is 30%. And definitely, if there is a tax treaty in place, probably you can get some tax relief. But the general rate now is 5% when dealing or negotiating Peruvian stock at the Lima Stock Exchange.
Thank you, Ana Luz. Okay. We're a little bit tight now on time, but please tell us quite fast. So in a summary, there is no major reform in Peru right now. So this is mainly administrative process or administrative burden. Perhaps the stock exchange exception is the main reform that is no longer applicable. But tell me a little bit internationally, is there any development?
Well, first I will say that an interesting change that applies to non-residents, for instance, claiming tax refunds from the government, which is happening now. Like sometimes there is a withholding tax wrongfully applied, and then when this represents a material amount, non-residents claim the refund from the tax authorities, and this is actually refunded. If there are grounds, the tax authorities issue a check and you can collect the money wrongfully paid. What happened in the past until last year is that the interest rate that the tax authority applied to the amount to be refunded was 0.42% monthly, okay? And this was considered unfair because when the tax authorities collect tax debt, let's say you omitted a tax inadvertently, when an assessment comes, the tax authority update the tax debt applying a moratoria interest rate, a monthly rate of 0.9%. So it was considered unfair because it's almost double the rate that they pay when you have made a wrongful payment. And to equalize the treatment, starting on January 2024, we will apply, or they will apply the same rate, 0.9% for refund applications.
Okay.
And this applies even to tax refund applications in process that were when a resolution was pending as of January 1st of 2024. And finally, in the international tax arena, everybody has raised an issue or a comment in connection with tax treaties. I will highlight just two aspects. First one is that under domestic provisions, in order to apply treaty benefits, Peruvian law required to provide to the withholding agent a residence certificate or a certificate of residence. And there are certain formalities to fulfill. The residence is considered valid only for 4 months since its issuance, unless the country of issuance provides for a reduced time frame. And another formal aspect to consider. And what happened in practice is that inspectors, when auditing, they were really willing to assess and disregard the application of treaty benefits just for these formalities. Even if there is a residence certificate, they challenge the application of the treaty benefit due to some issues with the information contained, the date of issuance. And this triggered the beginning of controversy, tax controversy. At the administrative level, not even the tax court was able to make the treaty prevail. So taxpayers failed, they went to the tax court. This has been for several years. And last year, for the first time, we have a precedent, a binding precedent from the tax court, the Supreme Tax Court, stating that the treaty must prevail for several reasons. And even further, it went further in a subsequent resolution. They stated clearly that the administrative courts and even public institutions, which comprises the Peruvian tax administration, must follow those rulings. So this is an important precedent that probably is going to generate further controversy, refund application, and discussion in the market. And let's say the approach that the tax authorities are going to take starting this year after these resolutions. And the second aspect to highlight, Pepe also mentioned, he expressed clearly what the MLI is and the purpose. Peru has signed the MLI in 2018, but the document was submitted to the Congress for ratification just in 2022. It's still under review by the applicable committee within the Congress. Hopefully, this will be passed soon. What I would like to stress is that, as Pepe mentioned, in Mexico, all treaties were marked as covered tax agreement. Peru did the same, excluding Japan and the multilateral convention with Andean community countries. But as Alemania did with Mexico, in the case of Peru, Switzerland didn't list or include Peru as a covered tax agreement. So at the end, in the case of the treaty between Peru and Switzerland, there will be a negotiation at some point in order to cover all the applicable clauses in connection with or oriented to mitigate or to combat the abuse in the application of treaties.
Understood. Thank you very much, Ana Luz, for this. Just for the audience, we are struggling a little bit on time, and we need to go through Brazil, which has a major tax reform. So please, there may be a very little time at the end for questions and answers. if you have any question, please put it in the chat. And if we cannot answer it, we will answer later on, perhaps by email or by some follow-up communication. So right now, let's go to Brazil. Valkyria, are you around? Hello? Is Valkyria around? I cannot see her. Okay.
Francisco, I think I've lost Valkyria in the process. I don't know whether she will be able to reconnect.
Okay. Let's. Okay. Let me see if we can reconnect. We have a. If not, let's go through that.
In the meantime, just while you try to reconnect with Valkyria, maybe we have some questions for the other countries that our viewers would like to submit. Feel free to do that now in writing. No questions? Seems that all our speakers have provided a really very comprehensive presentation for their respective countries. Yeah, there is a question from Mexico, from Laura Patricia Marquez. The MLI changes the provisions we already have in other countries. So that's the question for Mexico.
Thank you, Tatiana. I cannot attend that. And the provisions that we have in Mexico locally do not change. Remember that Mexico considers the treaty as a source of information or as a provision. So what I'm meaning is, if you have a transactions that involve international entity, yes, you need to review again if that transaction will be included in the new definitions of the MLI, even though maybe there was a treaty that mentioned the transaction you were carried out before. So it is very important to double check that the transactions you have with the entity, resident abroad, will not be covering within these new regulations and provisions. Locally, what Mexico only did is they ratify and consider the MLI as a source of information to consider provisions on international transactions. I hope that answered your question, Laura. Thank you.
Thank you, Jose. We have another question here from Manuel Lira. What is expected to be the Mexican position moving forward in terms of tax treaties, especially with the potential election happening later this year? Jose, that was for you, pretty sure.
Jose, we cannot hear you. I don't know, maybe something happened with your microphone. No, we lost you. No, we can hear you.
I don't know what happened in the past minute, but you are not on mute. Seems that we cannot hear you now.
Yeah. Some configuration or something like that.
Still no. Now you're on mute.
Now you can hear me?
Now we can hear you perfectly. Go ahead.
Okay, sorry. So what I was mentioning is for 2024, there is an election. However, we don't foresee, any drastical change. It might look that the same party that we're in the cover right now, they might keep the president election, but we don't know yet. However, we foresee that Mexico has, a very interesting international relationships. The government is not forbidden or banned any treaty. They still, negotiating the new treaties. In fact, there is one treaty that haven't been there for years. That is the one with Guatemala. That we really hope that it is approved. Mexico already approved it, but not in the other side. So I don't foresee that we will have, a step back on international relationships. On top of that, 2024, I'm sure that Mexico will put in the bill for 2024 reform the new BEPS, the new minimum tax that I was mentioning. I'm sure they will amend the local tax regulations, so now that we can apply this new minimum tax of 15% in order that Mexico have that in the regulations.
Thank you very much, Jose. We don't have any other questions at the moment. Still, there may be some. I'm just checking now whether Valkyria is connected. No, it doesn't look like it. Francisco, have you been able to reach Valkyria and see whether she can still give her presentation on Brazil?
I have Valkyria over the phone right now. Hello? Valkyria is trying to connect now quite fast. They have a situation with light in Brazil. The energy was off.
Energy situation in Brazil. Yeah. I see. Do you think this can be fixed in a minute?
Sorry, but let me see if I can connect Valkyria over audio. Valkyria, can you hear me? Yes. Tatiana, can you hear Valkyria or not?
We can hear Valkyria, and maybe you can share her presentation, and then we will try to get by as well as we can.
Perfect. Let's. Valkyria, hello.
I think I got back. I think I connected.
Perfect. Thank you, Valkyria.
Here we are.
Now back. Thank you very much.
Just unmute yourself, and then we can start.
I'm sharing again the screen.
Hi, can you hear me?
Yes, we can hear you. Perfect.
Okay, first, I'm very sorry. We had a lack of electricity, and I have to move to another place here. So.
Okay. Can you see my screen, Valkyria?
Yes, yes.
Perfect.
All right, go ahead.
Okay, so in Brazil, we are just facing two big moves in Brazilian legislation. One is the tax reform, which is the first subject that we have here. And basically, as we show here in this presentation, we move from 5 tax consumption taxes, 5 different kinds of consumption taxes, to 3 taxes on the VAT tax system. I think that just to better understand, because when we talk about moving from 5 to 3, may look that it's not a big difference, but when we better understand how it works, the current system, and how we are going to be on the after the tax reform, I think it will be more clear what is the real difference. So I will spend a few minutes talking about the current system. So here, when we see the move from PIS and COFINS to CBS, what we have is PIS and COFINS. They are taxes levied on the revenues of the operation, and it's more similar to a corporate tax than a consumption tax as it is applied currently. And what we have here is we have two taxes which have different rates, but they are applied on exactly same basis. But different from the corporate taxes, we have non-cumulative regime and also cumulative regime. So two different methods to calculate. And even being federal tax currently, it's one else fiscal obligation that the companies have to file monthly in a monthly basis. So besides PIS and COFINS, we have ICMS and ISS. ICMS is the sales tax, as we used to say. When we talk about ICMS, it's a subnational tax jurisdiction. So we have 26 states, and each state has its own legislation, even having federal principles and main law. We have the differences. Background, I'm sorry, I don't know how to reduce the impact of the noise, sorry. I will try to speak louder, and if you cannot hear, please let me know. But when we talk about ICMS, we have the complexity starts when we have in mind that we have 26 states, and each state has its own rate and specific internal rules, which lead the taxation of ICMS to what we call fiscal warrior. Yes, there is currently a struggle among the states in order to keep the revenue of its collection of these tax collection. When we talk about ISS, it's the tax due on services, and it's a municipal jurisdiction, which means that each city in Brazil has its rate between 2 and 5%, but each city has its own legislation. And then we go to over than 5,000 cities with each specific legislation and some specific rules. So when we talk about moving through from these 5 taxes to 3 taxes, it means in real, in practical terms, that the tax reform aimed to really reduce the bureaucracy and all the hours that the companies spend on all the fiscal obligations in a country that big, that huge as Brazil, to have all that different jurisdictions and complexity leads to a very expensive daily cost to the companies. So as we show here, we are going to have PIS and COFINS moving to CBS, and ICMS and ESS moving to becoming IBS. The two taxes are very similar to what we know globally as IVA, as VAT, sorry. Still keeping two different jurisdictions, which is federal and multinational, but we are not going to have all the difference between the states and cities as we have so far. And IPI, which is the tax levied on the industry, is going to become the IS, which is the selective tax that aim to collect tax on specific operations, as we talk, all that bring some harm to healthy or
Thank you,
environment.
Valkyria. So basically, this is one of the main reforms. The local taxes will change in Brazil. And perhaps the other major reform in Brazil is the one regarding transfer pricing. Can you elaborate a little bit on that one, please?
Yes, also transfer pricing is a very big change for Brazil, because since we have the OECD guidelines, Brazil was out of the OECD guidelines for about over 20 years, right? And we use it to apply TP rule, very based on a fiscal, how can I say, in a fiscal basis, with with fixed rates in order to obtain the prices that were considered reasonable from transfer pricing rules.
Got it. So
Yeah.
basically, are the rules fully aligned now with OECD guidelines, meaning that all the normal and standard things will apply for Brazil? Or what will be the main difference on that, Valkyria?
In general, all the OECD guidelines are going to be applied to Brazil, which means that we are going to have the essential of the transactions as the most important aspect, in order to have the method more appropriate to that kind of transaction. We are going to apply the benchmarking and also the same methods that you have on OECD guidelines, the local file, the master file. So basically, we are going to have all the same and main guidelines as you have in OCDE, globally speaking. Yeah.
Okay. For a matter of, we're just over the time. Just a final question for you, Valkyria, and perhaps this is what else on Brazil you can give the audience, like a flavor of the reform? What additional thing they have to consider or take into account?
It's very important to know that the tax reform that has been approved, it was in December, the last a month ago, so it's very recent, and it is related to the consumption taxes, which is it's that 5 taxes that I mentioned. We have the general aspects. From now on, we are going to have the specific rules. We already know that we might not have change on an overall tax rate, but it's important to pay attention mainly on services that currently has only ISS as tax levied, and it's going to be in this VAT model. So for some services, it could have a bigger an increase in the rate. So it's very important to pay attention and to follow the next rules. And also the corporate tax is going to be part of the tax reform as well. So we expect to have the tax reform regarding the corporate taxes on the following 6 months.
So we need to be aware about what you are going on. Perfect. Thank you very much, Valkyria, for this. And I have to apologize with the entire audience regarding the technicalities on the audio that we have. It's a bit difficult to connect with 7 countries at the same time. So thank you very much for your patience. In the slides that we may share later on jointly with the chamber, you may find that at the end of some of the countries, we have this type of links. And that's a link to the general information. Some of them is in local language, some of them is in English. So it's several links just for you. And just the last piece of the slides, it's just some general information from the different countries. Inflation, it's trying to be steady in the future. There are some growing sectors, there are some decreasing sectors. Latin America in general is a place for new investors, is a place for growing. It's a place in which Swiss investors and also other investors in US or in Europe will be focusing on as from now. It's something that there is some continuation on the current investments abroad. The nearshoring concept is also very important, and that will be a boom for some of the LATAM countries. And finally, let's just take some notes that in general, the tax reforms in each country are important to take care, are important to consider. If there is any further question from the audience on a specific country, feel free to reach us, feel free to reach the chamber or myself. We're happy to help, we're happy to support if there are some follow-up questions on this. Tatiana, would you like to give closing remarks?
Thank you, Francisco. We have reached the end of this webinar. I'm very sorry that we have to wrap it up. Not all of the questions in the F&A could be picked up. Please don't hesitate to send them again. I would like to thank all our panelists, Ana Luz Bandini, Valkyria Fiusa, Consuelo Munoz, Andres Cortes, Jose Jimenez, and Francisco Zamora for your thorough preparation and for sharing with us important updates on the tax situation in 5 major Latin American economies. It has been a pleasure having you with us. Thank you for providing insights, clarifications, and added value to a complex theme on which most of us, as you correctly pointed out, Francisco, us in the audience, we are not experts. So this has been somewhat helpful, I'm sure. Thank you also to our viewers for connecting. My apologies for the many technical problems, especially with Chile and Brazil. Luckily, they could be fixed, albeit not the background noises, but that's life. If you appreciated the presentations of our speakers, please give us a thumbs up. If you have any more questions which could not be answered or any more elaborate comments, there will be a Zoom inquiry coming your way tomorrow. Or you can also address the panelists directly by their emails, which you find on the biographies under events on the LATCAM websites. Do not hesitate to send us any questions that you feel were not answered here. They will be channeled to the right panelists and you will receive a reply from them in due course. And once again, thank you and hope you can join us on the next occasion soon. Till then, be safe and goodbye.
Thank you, Tatiana, for this opportunity.
Thank you all. Bye-bye.
Bye-bye.
Thank you.